I dropped all my things because I was so excited to log into the terminal and see what the data was.
You can come and go.
But I think we may be back to a Fed sitting on their hands mode and trying to decipher through the data. Mm-hmm. And again, we're still like, these are all noisy numbers. You're like, oh, great, headlines 50. Well, revisions is minus 76, but the unemployment rate's better. And I think the Fed will probably be most focused and comforted by the unemployment rate. And the market's not really pricing much for the Fed really until we get the new chair in June. So I think that kind of remains our base case for the Fed here.
So 2025 for the bond investors, a really good year. The ag was up 7%, something along those lines. In 2026, am I just clipping coupons? Is that how I should think about fixed income?
Look, I think that there's still absolutely an opportunity in fixed income. I think the same pounding the table that we've had for the last year, that there is, especially in this environment, an opportunity for global fixed income when you take a step back. And that doesn't mean not the US, it means including the rest of the world, which I think investors typically do not do. But I think I think curves should probably still steepen, but there's still that gives you roll down opportunity, and there's value in the front end. And I think thinking about the long end of the market, we have to think about all these things. Back to the questions that we had at the beginning of last year. What are the administration's policy objectives going into midterms? Like, what are they trying to accomplish? And then what is the impact on fundamentals? And I think there are so many moving pieces, but it's still about security and what's going on with, like, Trump seems to want cheaper oil and cheaper mortgage rates and those focuses, and then what do they mean to the market?
Futures up 26 right now. There's a bid to the market. Kristina, out past where Jerome Powell controls things, or maybe Mr. Myron controls things, what is the spread you find most efficacious? Don't give me the vanilla 2's10. When you walk in the morning and tune into one of your 3 Bloomberg terminals, which is the spread that matters to you?
So lately we've been looking at 230s, and we laugh that in a lot of places, meaning across a lot of different markets, different regions, it's like the whole curve, like because we're in this dynamic that the front end offers value, right, in 2s, and the Fed has done some work and seems to be kind of patient for now, but it feels like the bar for whatever forward Fed that we have to hike is very, very high, and depending on who we get with the next Fed chair, the bar could be differing in terms of how quick we are to ease. So that's the front end. And then I think because of all of these fiscal dynamics we're talking about, increasing the defense budget spending and all of these things, the long end matters even more. So like we really are zoomed out and looking at the entire curve and looking at 230s sometimes. And again, it'll shift depending on what's going on and what we've priced, but.
How do you think about in 2026 as you look ahead here, U.S. versus rest of the world? Because, boy, if you look at the stock market in 2025, as well as the U.S. did, international markets did even better.
Yeah.
How do you think about it in the fixed income world?
So, again, we run global funds. So 2025 is an exciting year for us, that there's finally some ability to step back. And, again, it doesn't mean that the U.S. is not investable and a great place to invest, but look at all of these opportunities elsewhere. And I think that still is the story and the underlying thesis, right? Like there is growth in the US and there are positive dynamics here, but a strong US is good for the rest of the world too. And I think that there are opportunities in foreign exchange markets as a standalone. There are certainly across fixed income markets. And I think in equities, again, like we're not equity managers, our team, but I think that global story is here to stay. And again, when you zoom out and you talk about dollar cycles or all of these cycles, they're normally multi-year, if not 10-year cycles.
Off the radar is continental Europe. Goldman Sachs published this today, Sven and their EU team, that Germany's just simply better than people expect. We've heard that from German banks as well. Is there a hidden value in larger developed EU paper that I haven't talked about in Paul, 3 years?
So I'm not sure. Again, it's hard to get super excited about just like European Union across the board, different countries because of how tight things are. But I think your first point is right, that you had a lot of excitement in Q1 on the German defense spending and all of that. But whether you talk to people, certainly in continental Europe, but here too. I think there's a lot of negativity, and people just don't believe that Europe can ever get out of its own way. And I think that there is more positive things happening there than is priced or that people give credit to.
But is it enough to play?
I think so. I think we are at a point that you need to see some proof in the pudding. I think maybe equities has it more. I think the euro itself has different, there are different dynamics there, and it's funding, and it depends what goes on with central banks. But I think there is still opportunities there for sure.